Fox Business Senior Correspondent Charlie Gasparino, along with H.J. Sims Senior VP and Director of Credit Analysis, Dick Larkin, the man who understands Puerto Rico debt better than anybody, joins us now for some perspective.
We should point out one thing about Puerto Rico, why this is different than Greece, and it impacts possibly the U.S. investor more. Individual investors own Puerto Rico debt. The muni bonds. It's owned by individuals who watch this show. It's in their mutual funds, and they own the individual bonds. So this will have an impact on the U.S. investor class. Just want to throw that out there before I bring Dick in. Dick, nice to see you. They made a payment.
Charlie, you look great. You look like you've lost some weight.
Thank you.
He's working hard on the Puerto Rico and Greek story, Dick.
It's all this default stuff is giving me agita. But, you know, Dick, they made the payment today. What you say is the rubber meets the road in a month, essentially, where they have to come to terms with the next payment, which they probably don't have the money for that. Can you unwrap that? And are they going to default?
That's my guess. I read the governor's speech this morning, and it was translated into English. And the only thing he specifically says is they're looking for investors to give them some more time. He doesn't say they're asking them to take a haircut. They're looking for time, and they need some time. I did want to agree with you, Charlie, about individual investors being the majority holders. But a lot of bonds have changed hands in the last year at particularly low prices. So many of the investors in Puerto Rico have already taken their beating.
So many investors took their beating. It's owned a lot of it's owned by hedge funds. Do you think these guys are betting they're not going to default? Do you think they're going to default in a month?
I don't know what price they bought those bonds in, but here's a scenario. Puerto Rico electric bonds are trading at 58 cents on the dollar. If a hedge fund bought those bonds at 50 cents on the dollar,
and
they accept the default, if they accept the default of 70 cents on the dollar, they make a quick profit of 40%.
Right, so this is a
I don't know if the hedge funds are in there for the long haul. I don't think they're in there for the long haul.
Can I jump in here?
But this is important. Is the government going to bail them out? Will the Obama administration bail these guys out? Because that's been bouncing around
Absolutely
a lot.
not.
Absolutely not.
Absolutely not. Absolutely not. However, I think there is a possibility, because there is a precedent, that perhaps no additional funds, but perhaps the federal government works out some kind of deal where they might put a guarantee on Puerto Rico debt. And that happened with New York City in 1975. Absolutely. Right after President Ford told New York City to drop dead, they're not getting any money, quietly they came in and helped back the city debt so they could buy some time and issue bonds that people viewed as safe. So I'm not saying it's going to happen, but it's a possibility.
For people who think, I don't have any exposure to Puerto Rico, could it still affect Americans who are in the stock market today? Could there be some type of, as they like to say, contagion if something bad happens? There's $70 billion in defaults that we could be facing.
I think, for example, if we're looking at a $3.5 trillion municipal bond market, $72 billion is a lot of money, but it's a drop in the bucket considering all municipal bonds that are out there. However, this is the hot story. This is causing some people to panic. Sure. So it's having some effect on municipal bond prices, but it's pretty muted. It's pretty muted.
Dick, it's great to see you. Thank you so much. Dick Larkin, Senior VP and Director of Credit Analysis at H.J. Sims, and, of course, Charlie Gasparino. Thanks.